Meantime, I want to continue this conversation on the global markets. We are joined by a very special guest this morning. Legendary investor Mark Mobius is joining us, founding partner, of course, of Mobius Capital Partners. He is also the co-author of Invest for Good, A Healthier World and a Wealthier You. Good morning to you, Mark. I want you to help us really understand what's going on in the emerging markets right now. You opened the Franklin Templeton office in Hong Kong back in the day. There are, of course, protests taking place there right now. I want to get your sense of what's happening in China and what it means to the region.
You know, it's really interesting. All these moving parts are becoming so complicated. Take, for example, the Hong Kong demonstrations. I'm here in Bangkok, Thailand. I was talking to a hotel operator. He said, this is great for us because a lot of the convention business that would normally go to Hong Kong is coming here. So you have a real situation where lots of moving parts. Now, generally speaking, a decline in the Chinese economy is not good for Asia generally because there's a lot of exports going from these countries in Southeast Asia to China. However, a lot of the manufacturing that would normally take place in China is now moving to Vietnam, Thailand, and other countries. So Thailand is benefiting from that. You know, I asked someone here in Thailand, why is the baht so strong? Well, they couldn't answer. I think the answer is that they're getting a lot of investments coming in to manufacture here. That's the bottom line. So central bank here had to lower interest rates in order to get this baht in line with the decline of the renminbi in China so they can compete with Chinese. So it's really interesting what's happening. There's lots of moving parts. And this trade war between the U.S. and China generally, I think, is not going to be a downer for the global economy. There'll be winners and there'll be losers, and a lot of the winners will be these countries that are replacing China as a manufacturing base.
Mark, can you share some of your thoughts on Chinese leadership related to the trade war in terms of what they're thinking about long-termism and where they're going to be between now and the 2020 election here in the United States and beyond?
I think they have to be very, very strong, and they want to show their public that they are strong, but at the same time restrained. They're not going to get involved in name-calling and that sort of thing. They want to take a long view. Eventually, they think they can win by taking a long view because there could be a change in administration. Even if Trump wins, we're talking about a few years, not very long. So I think they're going to be very, very cautious in the way they behave. And of course, one of the reasons why they have the Belt and Road program is because they want to expand their trading base away from the U.S. towards Europe, towards Africa, towards Latin America. So they're playing the long game. But I think at the end of the day, the U.S. is winning out on this because the trade gap is so big that any reduction in that gap will be good for the U.S. And, of course, if you look at the technology side of things, I think it's good that the U.S. is cracking down on technology transfer and theft.
Mark, I wanted to get your global take on the impact of low rates. I mean, as yields go negative almost around the world here, a consequence of very low rates and what has been a consequence are asset bubbles. And I'm wondering, when you take a look out at the various asset classes, do you see bubbles right now that could be a danger? And I'm thinking about the parts of the world where you invest in emerging markets and specifically emerging market debt, which had been so attractive for investors who are looking for yield.
That's a very, very good question because we really are not seeing any bubbles, at least in the equity market. I mean, if you look at any of these countries in Southeast Asia, there's no boom in markets. A lot of the markets are still down. As you know, the currencies took a big hit in the last few years. So the good news for these markets is that you're seeing lower rates. And, of course, as the U.S. lowers rates, all these other countries have to follow. For example, central bank in Thailand just reduced the rates, and you're seeing this around the world. So it's sort of a race to the bottom, and that's got to be good for equity markets. Bond markets, of course, those who are holding high-yield bonds will be doing okay. But here in Thailand, for example, the most risky loans are going for about 8%, which is not crazy. and a good company can get money at 3% or less. So this has got to be good for companies that have to raise money. And many of them are in that situation because many of them have expended a little bit too much. But the markets are still a long way to go up.
Mark, moving back to China, multinationals are moving their manufacturing out of China to Thailand, Vietnam, Malaysia. Dell and HP have moved laptop production. How big of a problem is this for China? Is it localized to just a couple big players, or is China going to see a serious deterioration in their manufacturing base due to these tariffs?
It's a problem. There's no question about it, because some of these companies have major manufacturing bases. But the bottom line is that, look, China is a 1 billion people market, and you're not going to ignore it. So you've got to have manufacturing for the domestic market. Yes, part of that manufacturing that is export-oriented will move to Thailand and other countries, but a lot of it will stay in China and will expand in China. Because don't forget that we're at the beginnings of the Chinese consumer revolution. They've still got a long way to go to get to where the U.S. is, for example. And, of course, that's the goal. They want to get to where the U.S. is. So I think a lot of the multinationals definitely will not pull out completely out of China. They'll want to be there.
And Mark, Hong Kong, given that you did spend so much time there and these protests, do you think China intervenes? How much capital flight is at risk right now? How do you think that plays itself out?
If there's intervention by the PLA, People's Liberation Army, that would be very, very bad. And I think the Chinese realize that. I think if they're patient, it will play itself out. The school year will begin again. Students will go back to school. Don't forget, the Hong Kong population is interested in making money. That's really what makes Hong Kong go. And they don't want that to be interfered for a long time. So, of course, the feelings are strong, but I think things will settle down in Hong Kong.
What's the best opportunity to invest? Where's the best opportunity market at this point?
Well, I'm finding a few bargains here in Thailand, so that's one area. But we're really excited about Turkey as one example of a market and a currency that's really been bombed out. Brazil, because of the reform program that's going on there. And then here in India, in Southeast Asia, India is going to be very important going forward. Incidentally, despite the fact there's been a little bit of slowdown in Chinese tourism coming to Southeast Asia, the Indian tourism is increasing at a pretty good pace. And that's an indication of how the Indian market and the Indian consumer is getting richer and richer. So India is a place that we're looking at very, very closely.
Mark, I want to thank you for your time, for joining us this morning. It's always great to talk to you, especially in the midst of all of this news and how it's impacting emerging markets. You're the one to talk to, so appreciate it. Thank you.